Hi fools, welcome to another video from the Motley Fool. I'm Owen Benelak. Now, Lloyds has confirmed that the government is going to sell more of the shares that you and I own in the bank. If you remember, at one point the government owned 39% of Lloyds shares, and then it sold 6% of the total stake, so it sold down to about 33% of the outstanding shares, and it's going to sell some more, it has confirmed. Now, it can't do this until April at the earliest, because it can't do it until Lloyds has basically published its full results, which will happen in March. But the word on the street, the smart money, Robert Peston at the BBC reckons it's most likely to be April. I think what's interesting to consider at this point is what price the government will get for those Lloyds shares. They have been on a tear. They're up about 50% over the year, and even though they've come down a little bit, they're well up on what some people thought that the government would ever get for this bank. I didn't. I own the shares, so I'm pretty happy about this, but there were some very pessimistic people out there. So we're talking about potentially a 3-month time frame. I'm not here to tell you what the share price is going to be in 3 months. I can't do that. But I can look at, I guess, the range of possibilities. We know that Lloyds was until recently about 86p. So we know until recently people were prepared to pay almost 10% more than the current share price for the shares. But Lloyds has since come out with a kind of half-glass full, half-glass empty update. Good news is that underlying profits have more than doubled to about £6.2 billion, which is pretty incredible. It's way ahead of analyst estimates, and that should be good for 5% earnings per share on an underlying basis. I think it's going to make 7p a share next year, which, when you consider, I mean, I got the shares at 33p, I think I bought them at, so that would have been a p of 5 in old money, and even on today's share price, we're still only looking at a P of about 11, so that's not very expensive. However, on a tangible book value basis, the bank is already looking fairly highly rated. It's over 1.5 times tangible book, which is kind of what you'd expect to pay for some kind of cloistered Swiss money manager in the good old days. So I think we can't get too greedy at this point. And also, the more astute listeners out there, or viewers, will have noticed that I said on an underlying basis. Exactly. Yet again, Lloyds has taken a provision for PPI mis-selling misdeeds of the past. It's taken another £1.8 billion provision against this. This is this thing where people phone you up and say, did you ever get anything from Lloyds? Did they save some insurance? Phone them up and get free money. That's pretty much what it amounts to. And the FT calculates that the £10 billion now that Lloyds has set aside for provisions, if it had been given out as dividend, it would have been 14p's worth of dividend, which when you consider the shares are about 80p, that is massively material. And until this PPI provision business goes away, finally, at last, it's hard to really see the Lloyds shares going, gangbusters in technical terms. So, obviously there's a lot of turbulence in the market as I speak at the moment, and really the Lloyds shares could be, they could be 70p by April. But I think probably in the mid-80s, you'd be looking at a P of about 12, a highish tangible book value, but it's got a really good balance sheet now. It's taken a hell of a lot of provisions for these PPI insurance claims, so surely the end is in sight. Can't have done that many more dodgy things because it's been a so-called good Lloyds for a few years. So I think the government should hope to get north of 80p. I'd probably sell at about 85p, sell some of my shares. I kind of think in the long term it will get over £1, and by the long term I only mean 2 or 3 years. But if you've got a lot of money in Lloyds still because you bought them cheap, then when the government sells, maybe you could sell a few too.